Yeah, there we are again. No update last week, but this week we are taking a look at the longer term developments of global markets again. If we skip a week here or there, it doesn't really matter because we're just following price action, and most of the time when you do that, you do nothing. And that's the most important part, that you understand that doing nothing means giving the markets time to unfold. That's what they need to establish those big moves that we're after. And now let's go ahead here towards the end of 2016 and assess the situation. What we see here right now is the Nikkei index. We have been mentioning this one along other indices, and we are looking at upside breakouts here. This would be one to take if you are a little bit more aggressive. There are earlier ones like in here that you could have taken. These are fractal breakouts that will show you the direction in which the market wants to move. On this weekly chart in the Nikkei, we do have a successful breakout to the upside. Price is now above the alligator, the balance zone that is here, these three moving averages, and we can see the momentum oscillator increasing. We have a close right at the week's high, which tells us that we are not rejecting those previous price levels over here, but we are most likely heading out to make a new high. Even more interesting, in my opinion, is the overall time frame again and again, because this is the one that will show you really within what kind of move you are trading. Even if you are on the weekly, this is even worse when you go down to daily or you're an intraday trader. Then you will have to pay attention to this as well, because you cannot assess a trend or a correction phase and then assume which way the market will be headed in the future if you don't know what your trend or what your market situation is on the higher time frame. And on this monthly chart, what we are pretty much seeing is a massive uptrend here. This is a long time ago, 26 years actually, until 1990 just roughly. And then this market heads into a 26-year correction. 26 years of correcting. That is a huge amount. But as we can still see, this correction or this movement in the last 26 years did not go as low as the start of that previous trend in the 70s. Which means that the previous direction this market had for 26 years ago will probably be picked up again. The question is, when will that be? Will that be immediately after the first correction into, or not just into the balance zone, but below it, the momentum heading below the zero line? Will it be after a little bit more of an extensive move, or just after a major correction here? Or, like in this case, will you have an extended period of time, an extended market phase that for some fundamental reason cannot move anywhere? You will get it back into the balance zone, you will get it back to previous price levels, just like you can see after we have made this low in here, we are coming up into the previous supply level, then we head down into the previous demand level, even associated with price levels on this side like 10-15 years prior. Then, and this is pretty much what's interesting to us now, is this market makes a low here. It comes up, gives you a couple of fractals. It has not made a new low here in 2012, 2013. Instead, it's establishing a trend on this monthly chart, going above the previous supply zone, and now we're simply correcting. It's a major correction, as you can see in the momentum oscillator, and now we have the situation where the price has come down, corrected, goes lower, but turns immediately around and breaks the previous highs. And this is a situation where you can kind of derive from the market levels that the breakout to the downside failed. We are rejecting lower levels down here. Instead, we want to resume and move back into the overall price levels to the upside, which are located here where the black lines are, as well as at the old all-time high in the Nikkei. And this would mean for us that a movement here is an initial up move after a 26-year correction. We are now correcting this with a major correction, as we can see in the oscillator, and now we are probably moving higher, continuing to these previous highs, because we have already hit the first black line, the second black line, which is a previous fractal area, which means market changes its mind, goes down instead of up like the previous trend over here in the 70s, and now we are probably approaching this again. Since it's not really far away from the first black line, which is the first supply level, we probably see an extensive move to the upside, continuing what has started here, exceeding those previous highs after these lows here led to the market turning, going up, which means we failed, we rejected those lower levels here at this point. This market wants to go higher. Now, we are not really sure at that point. We do not have a breakout fractal hit on the monthly. We don't even see it yet. A breakout above this high would be a fractal that is valid to buy just for continuous highs this market might be making. Otherwise, we're waiting for a fractal previous to this area and then buy that. On the weekly anyway, just like I showed you, we already had our breakouts. We're heading to the upside, which means on the monthly as well as the weekly we are completely aligned. We want to trade this to the upside. On the daily chart, if you're interested in a little bit more of medium short-term trend trading, then what you can see is that if you buy now, or if you have bought here, you really bought into momentum strength. You can see the oscillator moving higher. We probably see new highs as this continues next week, approaching this supply level up here. This is the situation in the Nikkei in detail. Let's just go and take a very quick look at some of the other indices, because all over the world this development can be observed. It doesn't really matter if you look at America, if you look at Australia, even Europe has been able to move out to the upside. If you just take a look at the DAX here, you can see a breakout being taken after all this annoying 2016 action. These fractals here have been taken now, even this higher one, and we are closing. There is no rejection of higher prices right outside the breakout zone, also assuming we are hitting these old highs. The US indices had been stronger during or throughout the last couple of weeks. We are not even talking about wanting to approach old highs. These markets are already at new all-time highs, and we are closing right there as well. The S&P here at around 2260 at the end of last week, and this is a pretty strong yearly close. If you look at the whole development here in 2016, you do not really have any sort of a trend move. You do not really have any thankful market for the long-term trend trader. Maybe this changes. Maybe 2017 will be a little bit more successful in this regard when it comes to these indices. Still, please remember what I've always been saying. We're still running into danger of this divergence here on the monthly. This is the higher trend time frame, or the higher time frame where we try to assess or derive some trend direction. And what this tells us is that we had this previous strong and long move, a correction, but it was only a minor correction. It was not a major correction going below the zero line, giving us enough of time in the market, or for this market to breathe, to really be able to gain enough momentum to the upside. What we now see here, usually at least from a technical perspective, is just the last kind of breaths coming out, not really going that much higher. It can of course still move on, but usually it's not a steep move. Usually you will see the market sooner or later turn around, coming back to old levels here down below, and then the momentum oscillator also shows you the spikes on the downside below the zero line. This is the monthly situation, but on the weekly and as well as the daily, we see moves rarely seen in the S&P. If you go back to 2009, show me a phase where you have like 2 months where the market is moving away from the balance zone like it did in here. If you just look at it here, you do always have much smaller candles there, and there's not as much volatility in anything here. So we'll see what that means. We don't want to guess too much. We follow the market action. All I can really say is don't be the guy standing in front of a train. If the market trend is the train and you're always positioning yourself against that because you think that important resistance levels in this uptrend are being hit, a lot of supply coming in, you're probably right, but the demand is so much stronger. The overall trend direction will always win unless you are lucky enough to be in that phase where there really is a reversal of the major market movement. So you have an uptrend on the weekly for years, and if at the end of this very long period you're able to catch that reversal kind of price levels, then your buying of resistance will be successful. But why would you leave the whole trend on the table just to always short in an uptrend like here into the resistance or into the supply levels? It doesn't really make a lot of sense because it cannot go that much. If the trend is prevailing on the higher time frame, then even if you are good enough to pick those resistance levels, your movement, the movement that you get, is so small compared to what the trend delivers you. Just following the trend, buying at the stupidest levels, you're buying the breakout. It's not a good entry level, but if you follow that major market trend, it will just take you up. You'll be sitting on that massive train and it will just ride with you, and there is nothing to stop it for a long time if you really want to trend follow. And that means you're looking at the higher time frame. You don't care what happens on the 4-hour chart. You don't really give what happens on the daily chart. You want to be the one who lets all the other participants put in and take out orders and accumulate also a lot of transaction costs, a lot of rollover costs, a lot of spread costs. You just want to position trade these things and be in there for the long haul, because you can actually build up into these positions, and as they run for 9 months, for 12 months, or even longer, then this is where the big money is coming from. And we will see if here in the S&P, in the Nikkei, it's much clearer, in my opinion, that there is some room left to the upside. But the S&P, the Americans, they might actually still be on a thin line here, not really knowing if there is a chance for these to continue that much higher, which is due to the divergence on the monthly. These are the indices. Let's take a look at the US dollar. We had a successful breakout in that. I have been talking about it. We are closing at almost all-time high levels. I see no reason for this not to continue next week upside. If it continues to the upside for the next 6 months, I have no idea. I had been pointing out this divergence in the momentum indicator. We have a strong move, a correction. Will this move really be as strong as this one? I don't know. Maybe it's weaker, maybe it will turn, but we are long in this, we are holding it, and we are not exiting until we get a fractal inside the balanced zone being taken. And this will make sure we are in it long enough, never getting stopped out at a weird kind of price level where we're stopped out and then the trend continues, you know. Unfortunately, we are also long in the US dollar Canadian, which is not following the other forex pairs, which also show us quite a lot of strength to the upside. Here we are coming back to the breakout level. Actually, we are at the balance zone. We are in the middle of the balance zone, and we'll really have to see if this can turn around and make new highs. It would surely enough follow its previous trend, but nobody knows when these corrections are over and a move to the downside, something like this, and then turning is also quite possible here. That's US dollar. Euro dollar will be much more satisfying than the previous example here. When you take a look at this, what you can see is that our waiting has been rewarded. Here we have quite a few fractals being taken, and the market is also following through in the last couple of weeks. We are approaching the complete low of that side move that went on after a previous trend to the downside had unfolded. The close of last week shows us that there is no real bullishness in this. We have temporarily come up, to these levels where the cursor is right now, but we rejected those levels. We are closing even lower than the open of the last week. We are not rejecting this previous demand level, this support, where you probably have a lot of buy orders sitting. Instead, we are closing right below, and when we take a look at the monthly, what this shows us is that we are just about to break out to the downside here, continuing this previous action. Also, this correction has not been heading up into the balance zone that much. We're not really seeing prices wanting to go up, break fractals to the upside. No, we are getting fractals that are forming inside the balance zone and they are never hit, which tells us that there is massive supply lying in there, and a market moving down into those areas here would be the ideal case for the long-term trend follower. It would take a lot of time. We're talking about like a year or something for this to happen, but if we can exert patience, then this would mean that we can participate in something like this, and we can build up positions, and we can take more risk than on all the other trades that fail, where we lose 1%. In this, we can end up with 3, 4, 5% altogether. And if we really get a movement here from 105 down into the 80 area, then we're looking at like a 1500 to 2000 point profit, and that of course would be awesome. Of course, that needs patience. We are short in this right now. We're looking at new signals. If this continues, let's hope for some weeks going down that are closing at their lows, where we don't see too much of a correction coming up on the weekly, and internally you get your possibilities for a turnaround because we're hitting this demand zone. But as we close right now, as I said, it's not that likely. That was the euro. The British pound Australian is still running. We have no reason to exit this. In here we have a turning, kind of a reversal candle right on the red line, which is the midpoint of our balance zone, the place where the price wants to be. We might get a fractal up here and then see this continue. Even though we had our entries over here, we are now up high enough to come back up to these entry levels, which of course hurts just a little bit, since we already were so much ahead during those weeks here. Couple of 100 points that we already gained, and now we have given it all back, waiting for a fractal, hoping this will continue lower. Since the overall time frame, the monthly, is lower as well, we don't really have too much worries in this that it will fail now. We are simply waiting for the fractal, tightening up the stop, letting it run. For the last chart, or the last market this week, we are looking at the New Zealand dollar, which I have also been talking about for quite a while. We have prices hitting supply in here on the weekly. Now we are breaking, or we had been breaking out below the breakout into the previous trend direction on the monthly. And the last 3 weeks have not been too good to us if we are short. We are still holding our shorts, at least I am. And what we can see this week is that we are coming above the balance zone, but we're closing right at its lower border. So maybe we have a chance for this to continue to the downside, as these breakouts were taken. On the monthly, you can see you have your down move, your correction. It fails inside the balance zone. And now we are probably coming lower. Maybe we will hit this area, maybe we go lower than this area, but maybe there is so much demand here that will turn around before these new lows are made. We don't know. We'll just trade this and see where it's gonna go. The same situation we do see in the Australian dollar, which is pretty much the same. We also have this downtrend correction here. We have already been pointing out that we're not closing above the supply zone. You have a lot of divergent bars, which means you have a long wig and it isn't able to close higher than the marked red line. Then your fractal to the downside is taken. The breakout occurs, now it corrects, comes back up to what has previously been support, is now resistance, and we're waiting for this to go down, making a new low. So here we also have the possibility for a trend. This was quite a detailed analysis here on the indices as well as a couple of other markets. If you have any questions, please post a comment, like the video if you like it. Thank you for watching, and let's just hope that these trends will continue into the end of the year so we can spend some relaxing Christmas and New Year holidays. Next week you'll also be supplied with an update by Fractal Trading, and just see you then.